They're calling it a bubble waiting to burst. UBS just flagged Dubai as one of the most overheated real estate markets on the planet, ranking it next to Los Angeles, Amsterdam, and Geneva in bubble risk. But if that's true, why are properties still selling faster than they're built? And why do investors keep pouring in millions every single week? This isn't the first time the world said Dubai's about to crash. They said it in 2008 and again in 2020. Yet every time the city came back stronger, breaking records that no one thought possible. So what's really going on this time? Are we staring at another property meltdown or witnessing the rise of a market that refuses to break? Because behind the headlines and warning signs, something far more complex is unfolding, one that could rewrite how global investors see Dubai forever. And it all starts with what UBS didn't tell you. When the UBS Global Real Estate Bubble Index for 2025 dropped, one city name shocked everyone: Dubai. For years, Dubai was known as a market on fire. Prices have climbed nearly 50% in just 5 years, and in some prime neighborhoods, they've doubled since 2020. That kind of growth sounds amazing until you realize what it means. UBS analysts saw the same pattern that usually appears right before a bubble bursts: prices shooting up faster than rents, wages falling behind, and investors betting more on future gains than on real returns. According to the report, Dubai's market officially entered the elevated risk zone, the same bracket as Los Angeles, Amsterdam, and Geneva. Not a terrible list to be on, but one that raises eyebrows when you've been on a decade-long bull run. And that's what makes this moment so critical. Because while demand is still strong, UBS believes the foundations are getting shaky. Rents aren't catching up, interest rates are still high, and many new buyers are banking purely on the idea that prices will keep rising forever. In real estate, that kind of confidence is both powerful and dangerous. It keeps the engine running until one small shock stalls it completely. But here's the twist. The people who live and breathe Dubai property every day say UBS might be missing something huge. Because what's driving this market isn't just speculation. It's population growth, business migration, and a global flood of money looking for a safe haven. And that's exactly where the story takes a surprising turn. If you talk to the people actually buying, selling, and building in Dubai, they'll tell you something very different from UBS's warning. The so-called bubble isn't just inflated air. It's built on real demand, real people, and a city that's expanding faster than anyone predicted. Dubai's population was expected to hit 4 million by 2026, but it passed that milestone a year early. That's the kind of growth that can shift an entire market overnight. Every new resident needs a home, and every new business needs an office. Together, they're fueling a housing demand that just keeps climbing, and it's not slowing down. In 2025 alone, Dubai issued nearly 50,000 new business licenses. That's tens of thousands of entrepreneurs, employees, and families settling into the city, each one adding to the need for apartments, villas, and townhouses. Then there's the international factor. When global uncertainty rises, investors look for safe havens. And Dubai keeps showing up at the top of that list. Russian billionaires, Indian entrepreneurs, European retirees, and African investors have all turned to Dubai as the place to park their money, far from political or economic chaos. What's even more interesting is that most of these deals are in cash. No heavy bank loans, no risky leverage, just pure capital. That makes the market far more stable than the leveraged bubbles we've seen in places like Vancouver or Sydney. Add to that the government's open policies: no foreign buyer taxes, no rent caps, no red tape strangling supply, and you've got a system that actually adjusts faster than most global markets. When demand rises, developers respond. When it cools, supply slows. That flexibility has kept Dubai surprisingly resilient, even when other cities stumbled. And the projects themselves aren't the same cookie-cutter towers of the past. We're talking branded residences, AI-powered smart villas, and fractional ownership through tokenized real estate. Innovations that keep pulling in a new class of buyers who want more than just a home. So if the fundamentals look this strong, why are analysts still nervous? Because even the strongest foundations can show cracks when the pressure gets too high. And some of those cracks are already starting to appear. For every boom, there's a shadow. And in Dubai's case, it's starting to grow longer. While the city's skyline keeps rising, so do a few warning signs that even the most bullish investors can't ignore. Let's start with oversupply. Developers are on a building spree again. New permits are now approaching the levels we last saw in 2017, right before the last market downturn. Back then, a flood of new units hit the market all at once, and prices sank fast. If that pattern repeats, some investors could find themselves holding properties worth less than they paid. Then there's affordability, or rather, the lack of it. Property prices have skyrocketed, but salaries haven't kept up. For many Dubai residents, owning a home is slowly moving out of reach. That means fewer organic buyers and a heavier dependence on foreign investors, which brings its own risk. Because as stable as Dubai looks, it's still tied to global money flows. If oil prices drop, if interest rates climb again, or if a major geopolitical shock hits the region, a lot of that international capital could vanish overnight. And that's not just theory. Some early signs are already visible. UBS data shows that for the first time in years, home prices are now rising faster than rents. That's the classic early symptom of overheating, when speculation starts to outrun real demand. Meanwhile, competition across the Gulf is heating up. Abu Dhabi is rapidly expanding its property zones for foreign buyers, and Riyadh is preparing to open its own luxury districts in 2026. If even a small portion of global investment shifts toward Saudi Arabia's Vision 2030 megaprojects, Dubai could start feeling the squeeze. None of this means the bubble is guaranteed to burst, but it does mean the balance is getting fragile. And while the headlines talk about record sales and record profits, some analysts are quietly warning that the correction has already begun, just in slow motion. Because every market hits a point where confidence becomes its greatest risk, and Dubai might be getting close. But what do the forecasts actually say? Are experts predicting a crash or just a cooling off period before the next wave? Let's find out. So, what do the experts really think? Are we standing on the edge of a cliff or just walking through a fog that'll clear up in a few months? If you look at the global reports, there's one thing everyone agrees on. The risk is real, but the outcome isn't set in stone. According to Fitch Ratings, Dubai's property prices could drop by 10 to 15% over the next year or two. Not because the market's collapsing, but because it's overheated. After years of explosive growth, a period of correction might be exactly what it needs to stay healthy. Other analysts, however, see things differently. They believe this isn't the start of a crash, it's a rebalancing. In other words, the top-end luxury segment might stay strong, while smaller or mid-range units could feel the chill. Real estate veteran Paul Jeffries put it simply, the fundamentals are strong enough to handle a cooling phase. What we'll see is not a collapse, just a split market. Translation: the premium villas, waterfront penthouses, and branded residences will likely hold their value. It's the oversupplied apartment towers that might struggle first. But not everyone's convinced the dip will be gentle. Some economists point to a familiar pattern, the same one seen before major downturns in cities like Miami and Toronto. Prices rising faster than incomes, developers ramping up supply, investors flipping off-plan units for quick profit. Sound familiar? Still, others insist Dubai isn't like any of those markets. It has different drivers: immigration, global capital inflows, business incentives, and zero property tax. That makes it more resilient than the Western cities UBS compares it to. So the debate continues. Is this the calm before a correction, or the setup for another rally that proves everyone wrong again? Because the truth is, both sides might be right, depending on what happens next. And what happens next depends on something no model or index can fully predict: human behavior. Because in Dubai, sentiment drives everything. And when confidence flips, it can move the entire market overnight. Which brings us to the wild cards, the unpredictable factors that could decide whether Dubai keeps rising or suddenly hits the brakes. Every strong market has its weak points, and in Dubai, those vulnerabilities aren't where most people think. Because the truth is, what could shake this market might not even start inside Dubai. Let's begin with the global money flow. Dubai's property boom is powered by international capital, from Moscow, Mumbai, London, and Lagos. But that same strength is also its biggest risk. If foreign investors suddenly pull back, whether because of sanctions, currency swings, or global rate hikes, Dubai could feel it instantly. We saw a hint of that back in 2018, when a sudden dip in oil prices and a tightening of credit markets triggered a mini downturn. The same could happen again if global conditions shift fast. Then there's interest rates. Even though many Dubai deals are cash-based, the overall cost of money still matters. If central banks delay rate cuts or if borrowing remains expensive, it could dampen demand from smaller investors who rely on financing. Oil prices are another wild card. When energy markets rise, regional liquidity surges. Investors have more to spend. But when oil drops, even the wealthiest Gulf markets start to feel the pinch. And finally, the one factor that can flip everything overnight: sentiment. Dubai's real estate market isn't just about supply and demand, it's psychological. When buyers believe prices can only go up, momentum feeds itself. But once people start thinking the peak has passed, that same momentum works in reverse, and it can happen fast. Add to that the growing competition from Saudi Arabia and Abu Dhabi. Riyadh is gearing up to open new zones to foreign investors in 2026, with massive projects like Neom and Diriyah attracting global attention. If even a fraction of that money diverts away from Dubai, the ripple effects could be serious. All of these moving pieces make Dubai's property market feel like a high-wire act, perfectly balanced but sensitive to the slightest wind. Still, not every shift leads to disaster. In fact, some insiders believe a cooling period might be exactly what Dubai needs to stay healthy long-term, a reset before the next phase of growth. And that's the question everyone's asking right now. Is the Dubai bubble just another global headline? Or are we seeing the beginning of a smarter, more sustainable market cycle? Let's wrap it up. So, is Dubai in a bubble? That depends on how you define one. If a bubble means unsustainable hype, speculation, and overconfidence, then yes, parts of the market are flashing warning signs. But if it means the city's growth story is about to end, that's a very different conversation. Because the truth is, Dubai has reinvented itself more times than any other city in modern history. It's a place that thrives on reinvention, from a desert outpost to a global capital of trade, tourism, and now luxury real estate. Every time people said this can't last, Dubai rewrote the rules. And maybe that's what's happening again. The market might cool, prices might dip, but behind every skyscraper and villa launch, there's a long-term strategy to make Dubai not just a place to buy property, but a place to live, invest, and build a future. So whether UBS is right or wrong, one thing is clear: Dubai isn't slowing down, it's evolving. Because this city doesn't just chase trends, it creates them. And that's why the world keeps watching